So in this video, we're going to talk about interest rates. It's often overlooked by owner operators, small business owners, is what the current interest rate environment's like. So first, let's talk about why you need to pay attention to loan rates or interest rates. Because if you're going to go buy a truck, part of that process is understanding how much interest you're going to pay on that loan. So for example, if the interest rate is high and interest rate on that loan is 10%, that's going to affect your truck payment. Versus if the interest rate is low, closer down to 7%, you're going to have a lower truck payment. So it may affect when you buy a truck. So for example, you may be in the market for shopping for a new truck or a newer used truck, but then you realize interest rates are really high, but they're expected to come down over the next few months. Well, you may want to wait a few months or 6 months for interest rates to come down. So it's something that you definitely got to pay attention to. So who sets the interest rates, and why should you pay any attention? Well, it's the Federal Reserve. They have meetings throughout the year, and they decide whether they're going to raise the rates or lower the rates. And the stock market really responds whenever they lower the rates. The stocks go up. Whenever they raise the rates, the stocks go down. So this is all about money. So and as little as 0.25%, a lot of money tied up in that. It's big business. So it's something that you need to pay attention to. And when the Federal Reserve raises interest rates, and they're raising the rate that that they're willing to pay for government debt. So if foreign countries like China or Japan buy U.S. debt, they will get a greater return if the Federal Reserve raises the interest rate. But if the rates come down, then everybody's happy. And the Federal Reserve has a dual mandate that they often refer to. One is unemployment, try to keep unemployment low, and the other is, I believe, is fighting inflation. So, we've seen this with inflation climbing. That the Federal Reserve kept raising rates. They kept raising rates to counter inflation. So it's tough. It's real tough. And as a small business owner, all I can say is just pay attention to those Federal Reserve announcements or meetings. It'll be all over the business networks, all over the business channels, that what the Federal Reserve is doing. You can do a Google search Federal Reserve and it'll tell you. So the other thing the Federal Reserve affects is interest rates on credit cards. So if the Federal Reserve hikes, the interest rate, then your credit card interest rate will go up. And this applies to your personal loans too. Whether it's personal credit cards or home loans or car loans, a personal vehicle loan, everything is affected by the Federal Reserve. So it's big business. It's something that people don't really give a lot of thought to, but if you really want to kind of quote unquote be on top of the game, you want to pay attention to those interest rates. So as interest rates, are part of your decision making process, you start looking at where you're going to park your money. Because if you put your money in a checking or savings account, typically it's not going to earn you any interest. But if you put it in a high yield savings account, you can get 4% interest, and very, very safe. I mean, that's about as safe as you can get. If you want a little higher return, but you're willing to take a little bit of risk, because without risk, there's no reward, you could put your money into an index fund like the S&P 500, which historically has gotten you 10% return. So see how this percent interest, this percent interest, return on investment interest, savings account interest, loan interest, credit card interest, this all becomes part of the owner operator mindset, is that got to pay attention to these interest rates, because you could be overpaying for a truck if you're paying too high of interest rate. So it's something that you at least got to think about a little bit before you make a purchasing decision. So let's say you want to improve your credit score. Let's give you a couple examples. Okay, and you have $10,000 saved up. All right. Now you could pay off a credit card. It has a $5,000 balance, but it has 15% interest on that credit card, which for a credit card is probably pretty low. Let's say it's 18% or maybe higher, you know. Um, or you can put that $10,000 into a high yield savings account and it has 4% interest. So this is a silly example, but what's going to give you the biggest benefit? Well, you're paying 18% on the credit card, but the high yield savings account is going to give you 4%. So here, you'd be better off in this example to pay off the credit card because they're charging you higher interest. So let's give you another example. Let's say you have a truck loan with 7% interest on the loan, and you have the same $10,000 saved up, and you could pay off your truck, or you could put that $10,000 in an S&P 500 index fund, which was giving you, on average, a 10% return. Some years it could be more. So here it's costing you 7% interest on your truck loan, but you can get 10% by investing it in a very safe index fund. So this would be like, well, if we're just looking at interest rates, it might be better to put it in an index fund because you can grow your money. So in that example, you would not pay off your truck. However, there's intangible benefits of paying things off. It makes you feel great. So, from a personal standpoint, you may say, well, I realize I'm not, getting the best return on this interest rate, but I want to pay that sucker off. So you go ahead and pay it off. But let's take another example. Let's say you have a student loan. Student loans are very, very common. And typically the government's charging you 3% interest. It's very, very low. Okay. So you have $10,000. You can pay off your student loan, or you can put it in an index fund. It's going to get you 10% return. So the student loan is 3%. Index fund is 10%. So in that case, you may want to say, okay, I'll put it in an index fund. However, I would say morally or ethically, you might be motivated to just go ahead and pay off your student loan. It'll make you feel better. I know it did with me. I paid off my student loan. I felt great. Like I finally got rid of that thing. So it was like an albatross around my neck. I couldn't believe it. I couldn't get rid of it, So it was like I had that student loan for so long. It was so great to get rid of it. But I could have took that money instead and invested it in S&P 500 and would have been better off with a higher, interest rate return on that investment. So, this is something that you just got to think about. Like, let's say, for example, you want to do an engine overhaul or an engine replacement, and you start talking to these loan companies and say, okay, how much is it going to cost for me to do an overhaul on my truck? For a loan to do the overhaul. An overhaul could be $25,000 or more. So, a new engine can be 50 grand. So you want to pay attention to that interest rate loan. If they're like, well, you qualify for the loan, you're like, oh, great. What's the interest rate? And they're like, oh, it's 20%. You're like, no, thank you. I don't want a 20% interest rate on a loan. And there are companies out there that will loan you money as a truck driver. They're like, yeah, you're making good money as a truck driver, we'll loan you money and we'll charge you outrageous interest rate. But and typically how this works is it's like going to a car dealership and they're like, what's the weekly amount that you can afford? Here you want to know what the price of the car is, but the salesman's like, no, how much can you afford each week? So if you say, oh, I could do, $500 a week, and they're like, oh, wow, we'll give you an 8-year loan on a personal vehicle and charge you, 13% interest. But you never ask on interest. You just ask what your monthly payment or weekly payment would be, and they fit it within your budget. But you never thought about interest. Well, you have to think about interest, because this is something that's very important. As a small business owner, you need to think about interest rates. So, when you're talking to your buddies and you're talking to other people on social media and whatnot, and if you really want to evaluate how good of a deal it is, and you start talking about truck payments and stuff like that, ask them what their interest rates are and see if they even know. Sometimes they may not even know. They just sign the paperwork and you're like, well, I had to have it, so it fit my budget. And it's like, well, you didn't ask about the interest rate, so it's tough, because it could delay you paying that loan off for extended period of time because that interest you're paying extra $10,000 to borrow money. So you definitely have to pay attention to interest rates. All right, guys, that's all I got for you. Thanks for watching. We'll see you on the internet.